Hi, I'm Bruce Bolger. I'm founder of the Enterprise Engagement Alliance, an organization dedicated to helping all organizations achieve their goals by fostering the proactive involvement of all stakeholders. And the purpose of this new education program is for CEOs, CFOs, boards, and anybody in management who needs to understand not only the concepts of stakeholder capitalism and enterprise engagement, which is in effect a part of its practical implementation, but also to understand the tactical implementation. How can we make this happen at the grassroots level? So today we're very lucky to have one of the co-founders, in a will, of this big movement. He is co-founder, founding, I should say, CEO of Just Capital, which is a organization, an independent organization that is equipping the marketplace with tools and insights to help organizations deliver the promise of stakeholder capitalism. And I don't think any organization is doing more right now to advance it. We have Barbara Porter. She's been at the front lines of this concept with many jobs in customer experience, which involve employees who deliver that experience. And she's an early contributor to the Enterprise Engagement Alliance curriculum, which is based on helping management implement at the grassroots level. And finally, we have Gary Rhodes, who is a professor emeritus at Brigham Young University's Marriott Graduate School of Business, focusing on marketing and entrepreneurship. And he has indeed fulfilled that because he's an entrepreneur and expert in marketing, founder of Allegiance, one of the first voice of the customer organizations that focused on connecting customer experience with employee experience, and then founding Xvoyant, which is a sales engagement company designed to really improve the effectiveness of a sales force. So thank you all for joining us today.
Thank you, Bruce.
Great to be here, Bruce.
Thank you. And I'm just going to stop the share here and accidentally removed myself, which is probably fine. So Martin, I'd like to start with you on this issue of a definition. You were kind enough to work with us to develop a definition for stakeholder capitalism because there really isn't one. It's not in any of the dictionaries. And what we came up with together, and it comes right up in Google for those of you who are interested, that stakeholder capitalism creates wealth for shareholders by creating wealth only for employees, customers, the communities, and the environment. Why is that definition so important, Martin?
Well, thanks, Bruce, first of all, for having this conversation. I think it is a crucial one. I think stakeholder capitalism is not about creating some new way to think about a business trend or something that's temporary. I think there's a major shift in ideology happening where business leaders, investors, understand that creating value for all of society is really crucial. If we have a market that only works for a few, that doesn't end well. So stakeholder capitalism is really a new vision for how business should work. What we think about when we think of business success, how do we measure success? What does it mean? If you don't define it, you can't possibly have any kind of common understanding. You and I have been back and forth on the sort of debate that's been happening in the public domain around what stakeholder capital is or isn't. And there's so much misconception about what it means. And I think unless we can even agree on what we're talking about, then we can have a proper debate on whether or not it's a good thing or a bad thing, or how to measure it, or how to make it work. But unless we're talking about the same thing, then that discussion is not meaningful. And so that's really important to get right. And I would say this also, shareholder capitalism, this idea of total shareholder return, one of the reasons why it has sort of been the North Star for a generation is it's very simple. It's very clean, easy to understand. Not hard it's hard to actually do, but not hard to conceptualize. Stakeholder capitalism cannot be complicated. If it's too complex and people don't understand what we're talking about, there's just no way we can bring it to life. So I think it's really important we define it. And as I'm sure we'll talk about, it's really important to how we actually measure it and have a proper discussion in the country about what it really means.
Because in the debate, Martin, I think some people are confusing it with corporate social responsibility, aren't they? They're thinking that stakeholder capitalism, well, it's a sacrifice that companies make. Wouldn't you argue, and you're just, and we're going to get back to your the work that you're doing with the ETF, the Just Capital ETF, and the data that isn't it just better business?
Exactly. That's exactly right. It's better business, and especially today. Today's business environment is hyper competitive. You have customers increasingly aware of how they bring their values to their purchasing habits, and their desire, in fact, to align how they spend their money with who they are and what they believe in. You have a generation of talent entering the workforce that is not prepared to check their values when they enter the office, virtual or physical. And so competing today requires companies to take in this broader set of dynamics. I will say this also, investors increasingly, the flood of capital flowing into ESG, sustainable, stakeholder-driven investment strategies is enormous. The data that Morningstar is, which is probably one of the best sources out there, on a monthly basis, net inflows have been breaking all records into ESG funds, and it accelerated during over the course of 2020. Why? Because the factors that are driving stakeholder leadership and the business performance benefits and the premiums that we see in our own research are sort of helping all of that capital drive superior returns. So the connection back to business performance is actually the opposite of what skeptics believe, which is it's a zero-sum game. You know, I'm investing in these other stakeholders, or I'm doing things that create value for my investors. No, it's the other way around. Any smart business leader, any smart long-term investor will tell you the way you create long-term value is to create value for all of your stakeholders. So I think in many ways it's sort of how to do this. What does it mean? How do we measure it? Not the rationale for why it exists.
Well, I hope you're right. And I'm going to shift to Barbara on that because, of course, working for EY, otherwise known as Ernst & Young, you are at the front lines of this with major companies. And of course, we're never going to ask you to talk about companies in particular, but also you had your own company for many years. You are an entrepreneur. Yep. And you're an expert in call centers. So Barbara, do you think there's do you see signs now that that at the more front lines that businesses are beginning to get it? And because we'll know they're beginning to get it when they create the right metrics and the right mindset. Are you seeing that at the front lines in general, or not, or a little bit?
Yeah, I mean, we're definitely seeing it, which is great. I mean, that's the encouraging news, is that there is more discussion around, employee engagement and the importance of empowering and engaging your employees. Again, not just so that they're happy, but so that they actually contribute to the strategic, results of an organization. And so, I'm encouraged by those continuing conversations. How we measure that, and then, how you link it to performance, I think is the tricky part. And, as technology, starts to get more and more mature and move faster, and we have ways to measure, I think we'll see more adoption. But the discussions are there. There are some companies, definitely taking a leading step, but not enough, for sure.
And, it's very funny to me, there's new ISO standards on human capital reporting, ISO 30414, and they have two metrics in there that have been linked to financial performance. One of them is called human capital ROI, and it's basically a simple calculation where you divide out all of your people costs against your profits, and another one with slightly different calculation called human capital value add. Both appear to be predictive of EBITDA, earnings. Barbara, do you know any company out there that even knows what those two calculations are, let alone tracks to them?
Yeah, not that I'm working with, so I can speak for the companies that I interact with. However, there definitely are companies that are measuring employee engagement. And Gary, I'll let you jump in here, because Gary and I worked together a number of years ago. I was one of his clients where we measured employee engagement, and knew that if our employee engagement went down, that in 60 days, our customer metrics and our operational metrics would decline. And if it went up, same thing. So I know there's ways that people are measuring it. Again, it's just not as prevalent as we want it to be and moving as fast.
So Gary, that's a great segue to you. And you have a great perspective on this because you've educated some probably business leaders, hundreds, maybe thousands of business managers, and you've been a CEO of two, or certainly a head of two organizations that grew rapidly. Do you think this is a fad, this new talk of stakeholder capitalism and these concepts, or do you think there really is a tipping point?
Well, I can tell you in our organization, many that I work with, we always, part of our core value is making our customers heroes, making our employees heroes, making our partners heroes. I mean, that statement says it all, because when we impact those of our stakeholders, our other partners, profitability goes up. I mean, there are so many studies and Gallup studies and McKinsey studies and everything that show that organizations that have positive relationships with their stakeholders, that try to build value, that share a wallet increases, profitability increases, revenue. And you might say, well, with all these studies, why is it they don't do it? Because you still have to take that leap of faith. You still have to believe that if I take off my eye off just the customer and put more resources into the employee or into our partners or into our channels, will it make a difference? Those that do see the difference. But it's getting the rest of the executives and leadership to really take that leap of faith. And I really think today there are more pressures in this country and around the world. I mean, consumers and society at large are expecting more from businesses. Look at all the distrust with capitalism and organizations today. There's never been a time where you really need to start building your communities and and all your stakeholders, because I think if you don't act on the stakeholder capitalism, that I think it's going to be problematic in the future, because even the employees that I have today, they'll meet and say, can we do more than just make money? And I said, what do you mean, right? I mean, as a CEO, what are you talking about? And they said, well, can we have some initiatives in the company to make a difference in our community? So then we get them together and say, what really do you have passion about? What do you really want to make a difference? And then we do it. And then the thing is that makes them more loyal. That they're less sick days. I mean, all the things, when you can align the passion of your partners and your employees and your customers all together in one, just great things happen.
So Gary,
yes.
As a professor, isn't the problem that CEOs aren't learning about this? Is that one of the problems? That literally they're not training CEOs.
There's a lot of pressure for short-term performance, right? Everything's on the next quarter. And I mean, even our financial system and the way we look is so focused on short-term gains, right? And that's why I say the leap of faith. You have to, you're not going to sacrifice a quarter, but you're going to have to, put some resources into other stakeholders and that. And then when it all comes together, you're going to have greater wealth, greater share of wallet, greater profitability, greater performance. But I think it's hard to get past the focus, which is right at the end of our nose, right? What's next quarter's earnings going to be? And we're just programmed that way out of business schools. I mean, I taught in a business school, and it's all about short-term gains. Even though we talk about long-term gains, long-term value, we're very focused on short-term. We all know that, right? Anyone that has a responsible position. You've just got to have a board and an executive team that realizes that we're in here for the long run. Let's look at the end of the year or 2 years from now, the impact of our stakeholder capitalism. So I think it's just the nature of our short-term focus.
So Martin, Could you, your organization is singularly focused in your mission and in everything you're doing to make stakeholder capitalism happen. How are you, could you tell us some of your activities, what you're doing, and how people that CFOs, CEOs, and other managers who are listening to this program throughout the year can benefit from what you do?
Sure, thanks. So you could think of what we do in three things. First of all, we're not for profit. You know, we exist as a 501c3 with a mission of building a more just and inclusive economy. Stakeholder capitalism is a means to an end, which is to try and, you know, address society's most intractable problems and challenges. So we do three things, Bruce. First of all, for 7 years now, we do extensive survey, polling, and public engagement. We don't define actually what stakeholder issues are. The public does, the American people. We think that's really important because, you know, the public are the market. They are, you know, it's their energy, their dollars, their time. We wanted to know how the American people define stakeholder capitalism. And now we have a very clear definition of that. So that's ongoing work. And you can go to our website, adjustcapital.com. You'll see all of that work laid out. Again, because we're a nonprofit, we're very transparent. And any business leader who's watching this or listening to this can see exactly how the public feels about issues, including right up until recently, we've been surveying around the role of companies in politics and election. So that's the first thing. And that's where the 5 stakeholder categories come from that you mentioned: workers, customers, environment, communities, and of course, shareholders. And the most important by weight are workers. Why? Because most of us need to put, you know, bread on the table for families. You know, we have to, we want to, you know, our whole identity is wrapped up in what we do. And so the relationship between a company and its workforce is the single most important stakeholder dimension. The second thing we do is we then track America's largest publicly traded corporations on all the things that the public have said matter. And we do that in a very objective, data-driven way. And our research team is constantly trying to figure out, how do we measure companies on whether they pay a living wage? How do they do on racial equity? How do they do on education, workforce, and training? What are they doing on sourcing locally and lifting up communities where they operate? What are they doing on environment? So we are sort of like I say, a very sort of data-driven research engine that tracks companies. And last year, of course, we spent a lot of time on COVID, which I can talk about if you like. The third thing we do then with all of that data is we develop products and rankings and tools and marketing and content. So we've launched now 7 investment products with different fund manager partners, so people can invest in just companies. We have approximately $250 or $275 million across those products. Our flagship fund is with Goldman Sachs. It's called the Just ETF, and it trades on the New York Stock Exchange. We also have very strong marketing activities. We partner with CNBC. We've partnered with Forbes. Again, to spread stories. We're very focused on best practice. We're very focused on lifting up leadership and identifying what can companies do to be better, what can individual business leaders do to be better on the things that matter to their business. So all of that is laid out. We work very closely with the companies. Of the 1,000 companies we're tracking, we're in touch with or engaged with about 550 or 600, so a substantial number of companies. And there's probably 100 or 200 that are very closely involved in the program work and a lot of the activities that we do. So we then run special programs around certain themes which are particularly important. And right now we have 2 that are very top of mind. One is around worker financial wellness, because there are millions of full-time employees at large corporations that still rely on government support to make ends meet. So how can we address economic hardship for employees? And then the second program is around diversity, equity, and inclusion in the workplace after George Floyd and companies' desire to do a lot more on that issue. So that's a playbook that we develop in partnership with companies. So those are the three areas: the investment work, the data and the products and the tools for companies, and then the work we do on programs to actually help drive change.
So, to the bottom line of all of this, and your I want to talk quickly about the ETF that Goldman Sachs has. Last time I tracked it, Martin, you were way outperforming, or it was way outperforming the S&P 500. Now that's not scientific. I got a professor that I work with didn't like a post I said. He wrote, well, that's not a fair comparison. But I said, wait a minute, for the last 27 months, you guys, I believe you had outperformed the S&P by 14%, and the S&P did very well during that period. And while that isn't scientific, I think basically what we heard from Gary and Barbara, stakeholder capitalism is not about giving up profits. It's about having more sustainable profitability, isn't it?
Exactly. Look, it is what it is. It may or may not be scientific. All I know is that our index outperforms the benchmark. You can look at reasons why that might be the case, but our just 100 of top companies also outperforms its benchmark. When we are tracking, what's really interesting actually is within every sector, when you look at the top performers versus the worst performers, and we've split this out by quintile. So we kind of divide every sector into 5 groups. You almost always see over a period of time greater than 3 months, which is sort of, we track over the long term, but even on short-term performance, you tend to see outperformance. Now you can ask yourself, why is that? That's where it's healthy to be skeptical. It's healthy to say, okay, what is happening here? Are these companies more successful because they've embraced a stakeholder model? Or are they, something is predisposing them to be successful, which they are then, because they're successful, can now begin to, allocate resources to other stakeholders, to lift wages, invest in environmental initiatives, and so on. And I've heard that for 25 years. I've asked a lot of CEOs that question, and the answer is crystal clear. You don't become a stakeholder-led company once you've been successful at being shareholder driven. You don't suddenly have this St. Paul on the road to Damascus conversion like, oh, we've been successful with this model. Now let's be really nice guys and start to invest in our workers and do all these other things. No, those are values. They don't change with the wind. That's how you build a company. And that is embedded into successful legacy brands and successful long-term businesses. Any business leader worth their salt will tell you that. So what I come back to is, I can't tell you one metric ties to performance, but the overall picture of a successful business in 2021 is one that is well aware of all the needs of its stakeholders, what it needs to do to drive value for them, and how all of that flows back for the benefit of their investors.
Yeah, Martin, you bring up a great point, and you mentioned it earlier about the importance of the employee and the relationship. And I think, understanding why that's important, when you think about employees and you think about a company's purpose, their culture, their values, it's a differentiator if you really harness it. Because no other company has your employees, right? That all bring the different experience and background. And so I think finding a way to really align your employees around that common purpose, around your culture, how people work together to get things done. And then finally, the values. What do those values look like in action, so that from the board all the way to the front line, people understand how their actions contribute to delivering not just on bottom line results, but actually bringing the values and the purpose to life. And I think that's really important, that people understand why the relationship with employees is important, and that we have ways to, like you said, ask the employees, what's important to them. And I'll just give you a quick example. When I was running an operation for a large utility, through our Voice of the Employee tool, I wanted to know what was important to them. What are they trying to accomplish? And we found out we had 3 themes. One, people wanted to pay off credit card debt. People wanted to go to school, but it was a little expensive. And 3, they wanted to buy a home. So we took those 3 themes, and everything we did, around our incentive programs showed how we could help contribute to one of those 3 goals. We had lunch and learns around how to balance your checkbook, right? Saving money, setting a budget, things like that, go above and beyond your job description. But by harnessing that, we had an organization that, delivered, went from contributing 3 or 4% of corporate earnings to about 13 or 14% in 4 years. So,
Yeah.
So
The
Barbara, we
exact
just have
same-
actually 5 more minutes, so I need to be very careful here. We could talk all day. It seems to me, and excuse me if I interrupted you, Martin, it seems to me the big challenge right now is how. Because companies tend to throw bright, shiny objects at things. Oh, they hear a fad. Let's do this. Again, getting back to Gary's short-termism. Let's put ping pong tables in the lunchroom because the employees said they wanted it. And then the 2 challenges, Barbara, I'd like you to quickly help us with. It seems to me one of the challenges that there's no CEO-led strategic and systematic approach. It's more like bright, shiny objects. And the other challenge is that organizations are broken into silos. So to get that alignment that Martin talked about of all your stakeholders, for instance, even at EY, I believe the people advisory practice is separate from your customer experience practice. Isn't there a fundamental training and structural issue that we have to face to make stakeholder capitalism happen at the front lines?
yeah, and just, at EY, the difference though is we all have a common purpose, building a better working world. And regardless of where we sit within EY, that's the common purpose that we all kind of our North Star that we look at. So whether it's building a better working world for our employees internally, whether it's for our clients or the communities that we all, operate and serve in. So it is that common purpose, regardless of the org structure, that can really help align an organization.
And then within the practical implementation, I'm going to bring it over to you quickly, Gary, before we conclude with Martin. But from a practical standpoint, when you look at the way a lot of clients are set up today, it seems that oftentimes their different activities are working at cross purposes, and their faculty actually struggles within human. What are we doing with our assessment tools? Are they even being used? Is training aligned with that? Do we have training effectiveness? Is DI being connected to our rewards and recognition? Don't many large companies have a serial structural problem that they have to address in terms of more alignment?
Yeah, we were, in fact, in our MBA program, we were really focused on really breaking down silos. And you're not just a finance manager, you're part of a bigger community. If your HR isn't the only area that worries about engagement, right? You should have individuals all meeting together. Accounting should be responsible for engagement issues and stakeholders, finance, marketing, everyone, instead of just these different silos. So you got to really teach skills. It's different skills and different goals that you're setting in that for the whole enterprise to work together for a similar purpose and a culture, as Barbara's saying. And that's the thing is that a simple example, we had an accounting program, the accounting group, they were sending out bills and it was causing a lot of problems in the company. What we do is we made them responsible for the engagement of customers in responding to those issues. And so when you start breaking down the silos instead of there's a finance department and you put someone at the executive level that interacts with all these departments and train people with the skills to understand the whole process of an organization, you start getting better stakeholder engagement, with all the entities. So I think it's, really, you've got to build new capabilities and talents. You got to think about if we're focused on all the stakeholders, what does that mean to people in the finance department, accounting, and the different silos? How do we break them down and get a more kind of horizontal kind of structure than a vertical structure. And those things, there's a lot of information out there and you can do it, but you have to think about it. It comes again, setting goals, getting top management, the board on board, and then setting goals and tracking things on how well you're impacting your various stakeholders.
And that is going to give me a great opportunity to conclude with Martin. So Martin, I think we agree here that this might not be a fad. I'm not, having been at it so long, I'm a little skeptical. But what do you think, Martin? Do you think this stakeholder capital, still a lot of people haven't heard the term. If you ask a whole bunch of people, there's still people haven't heard it. They've heard maybe conscious capitalism, inclusive capitalism. So Martin, what's your conclusion as to, is this really taking off now? And, or if not, what are the obstacles still?
I would say it's very finely balanced, Bruce. I think change is afoot for sure. It was interesting. Fortune did a poll of CEOs a few months ago, which I'm sure you saw, where so just maybe 1 or 2% of Fortune 500 CEOs felt that shareholder primacy was the way to go, but 65% or 60% of CEOs felt that they were doing stakeholder capitalism already, and then 30-something% felt like actually it was the future, but it was something different than they were doing now, required change. And you had CEOs who felt like they're doing it already. You wonder, okay, well, what then is this about just business as usual? Or is this about actually doing something a bit differently? And even leaders like Mark Benioff, let's say at Salesforce, or Dan Schulman would say, no, you have to do things differently. So I think it's messy right now. And, I feel as though all we can do is continue to lift up leadership, try to drive best practice, make it real simple. I'd love to see the advent of total stakeholder return, something really simple, a hook that helps us figure out, okay, am I doing well on stakeholder capitalism or am I doing badly? And if I'm not doing as well as I want to do, what specifically do I do Monday morning to be better? So I think you need to create that. And then you have to have the right message and the right messengers. And the right messengers today are all about business leaders. And the last thing is the policy landscape has shifted in January, obviously. And so I expect to see a Biden administration make some moves, especially through the SEC, that will begin to push this agenda. So you got all these things happening at once, which sort of like, I like to think I'm a natural optimist. They will coalesce in something we can look back in 5 years and say, yeah, Bruce, absolutely. See, stakeholder capitalism now, everybody's doing it and it's the norm.
Well, folks, I want to thank all of you for this great session. As a quick summary to everybody, once again, stakeholder capitalism, the definition is very important. It's creating wealth for shareholders by creating wealth for customers, employees, communities, and the environment. It's not about robbing from Peter to pay Paul. Number two, this is about having clear metrics and having very clear human capital metrics that are right for your company. And if you're a public company, you're going to have to start disclosing these. And with the new SEC chair, those disclosures are going to get more specific. Third, it really requires board, senior level, CEO, CFO commitment. This is not something, it's not a bright, shiny object. You don't throw buzzwords at it. I would liken it, folks, to total quality management back in the 80s. Everyone was talking about quality management. It was just buzzwords, bright, shiny objects. And it wasn't until we adopted a proactive, strategic approach that we really began to address the issue of quality management. Another key point is that the problem is that there's too much short-termism. A lot of executives just feel pressured for that next quarter. This is about convincing boards that we're going to have a more sustainable profitability. And then it's going to take education and outreach. And that's what the good folks at Just Capital are doing, I think, better than anybody, and proving it through the pocketbook with an ETF that I'm not allowed, obviously, to advocate investments, but I think it's worthy of anybody to take a look at the Goldman Sachs Just Fund. So folks, thank you very much. This program was produced by the Enterprise Engagement Alliance. We're an outreach organization focused on helping companies implement at the grassroots. So while the people at Just Capital educate our CEOs and everybody else and investors, we are at the front lines with helping companies like Ernst & Young and others, those smaller, and I shouldn't say Ernst & Young is a small company, but companies at the grassroots profit from it. So thanks, folks, for all of your time. And look forward to working with you again. Bye-bye.
Great.
Thanks
Thank
for-
you.